All right, is now recorded. So, give me a sec. Let me admit everybody. All right, so I'm about to share my screen now. If you can see my screen, once you see my screen, let me know you can see my screen. If you see my screen, just let me know you can see my screen. Who can see my screen? Can you guys see my screen? Talk now. Time they go.
Yes, we can see your screen.
It's time go finish. I'm not do this.
Yes, we can see it.
You people should flow with me. That I tell you guys not to talk doesn't mean if I'm asking a question, you cannot answer me. It's help me to help this section and complete. All right, so quick one. We have people should always join the time now. So we have the XY on the screen. We have the dollar on the screen. In fact, just you people should tell me thank you because all the analysis, everything I said in the last episode has played out exactly. Just tell me thank you before I continue. Don't tell me thank you. I need to go anywhere. It halts here. But I don't receive thank you and we halt here like this. People don't want to talk. Voila. Okay, so first of all, we remember we said that the reason why the XY was supposed to go up was that we saw a bullish engulfing. So this bullish engulfing at this area of demand, this is an area of demand where this particular candles dip into. So it held here because of the demand zone. I don't want to plus it out because if I do it, the chart will be looking very messy. So just use your eyes, see the screen. You can see this bullish engulfing candle. It closed as a bullish engulfing candle. This was the month of August. So this gave us that bias, that it gave us that confidence that it was about to go up. So quick one, after the bullish engulfing, we went to the weekly time frame. And on the weekly time frame, we saw that, remember this break of structure, we saw that it broke structure. And I said in the last episode that before this guy continues to go, it has to pull back to a significant area of discounts. Discounts, you can also call the discount zone is a demand zone. So if you hear me say discounts, you hear me talk about demand, they all mean the same thing. I talk about premium, I talk about supply. Anyone I use, just know they mean the same thing. So I said that it has to go back to a significant area of discounts, right? And the first discount we plotted out was this very zone, which price has really dipped into, right? This is the breakout block. This block here is a breakout block. So it has dipped into this breakout block, but then I think it would go into the second area of discount. So whichever one holds price will likely participate in the bullish rally. So if this one decides to hold price, we'll see the reaction from here. There will likely be a pullback, a break of structure on the smaller time frame, probably the daily time frame, or the 4 hours time frame, whichever time frame, we likely see a reaction from this level. But I don't really think, based on what I'm seeing, I perceive this particular discount would be very much potent to hold price. The reason why I'm saying this is because if this guy pulls back to this discount, this will make this whole structure an inverse head and shoulder. And when price gives an inverse head and shoulder, it's a significant reversal patterns. So I perceive this guy to pull back into these discounts before the rally. So the price structure will likely be like this, but this is not me. Now you have to understand this is not me predicting anything, right? I anticipate the markets, right? I I try to perceive the market as to what he's doing. I'm not trying to predict. So this one might hold the price. I don't know. I can't tell you for sure that this particular one will hold price. Why? Because I'm not the market maker. I only work with what the market is telling me per time. So if this one decides to hold the price, if the market has now that the market has dipped into, this can, if it decides to go up, of course, we'll see a reaction from this level in terms of a pullback in and break of structure on the smaller time frame, being the daily time frame or the 4 hours time frame. That is what we will call. But if this one doesn't really have that strength to hold the price, it will now dip into the second discount here, which is really potent. And if it dips into this discount, then it will be an inverse head and shoulder. So two things are going to happen on on this dollar. The first, which is what I've just analyzed here, and the second, something like this from here. It just decides to reverse from here, right? So if it reverses something from here, so anything is just possible, all right? So this is just it for the dollar. So let's go to the next asset, which is Euro USD. Oh, this guy has really given us a very fine structure. Now this is the Euro USD. I don't want to take out all this level, but then so you guys would see what I'm trying to say. Let me just take it. Let me just expand it a little bit. Now this is Euro USD. Remember that we talked about, we saw that euro had fallen from the mid of 2021 throughout 2022. And towards the fourth quarter of 2022, we started seeing some reversal. Initially, I thought this was a reversal, but now I see that it wasn't a reversal. Why? Because the market cannot just start reversing like this. Before the market reverses, it has to give significant structure, head and shoulder, inverse and head and shoulder, double top, double bottom. Those are reversal patterns. So last year I was even thinking this was a reversal. Now I look very well. It was a reversal. It was a pullback. And now the pullback was to these massive supplies of or premium. So you can see this, my area that has been highlighted. It was a significant area of premium. Now look at what price it. This you can even if you look closely, for those of you who really understand the concepts of ICT, this is an order block. This candle, the last bullish candle before this decline, right? Is a bullish candle. Bullish, sorry, is a bearish order block. Am I correct? Are you guys following? Am I correct? Bearish order block, right? Speak to me if you can hear me.
Yes, sir. You're right, sir.
All right. So you can see it here. Let me plot it out. I will delete it. So you can see it tapped into this bullish, bearish order block rather. After it did tap into this bearish order block, look at what happened. It closed as a rejection. It closed as a rejection. Quick rejection. You can see. Now, what followed that rejection? A bearish or a bearish what am I saying? Not a bearish engulfing. After it closed as a rejection, the next candle closed as a bearish engulfing, confirming that this guy is about to collapse. Now, going down to the weekly time frame to see, to check, really check that in, let's really understand what the market was now saying. There was a break of structure, right? A break of structure. You can see this BOS, it signifies a break of structure. You can see this was the low, it broke this low. Now, what I said in the last episode, can someone tell me what I said in the last episode on what Euro USD was going to do? Quick one, please. Someone just volunteer, talk, and we continue. You don't have enough time. You just have like how many minutes left? What did I say? If you follow the last section, nobody's talking. Who is talking? Nobody. All right. So what I said in the last section was that I was expecting Euro USD to pull back to a significant area of premium. And that significant area of premium was what we highlighted here, this order block, right? Now look at what Euro USD did. So it's already pulling back into that order block. And I also said that if it pulls back into this premium, it will mean that Euro USD would be doing and would be giving a head and shoulder pattern. You can see the left shoulder, head. So this one will mean it will give us the right shoulder. So Euro USD, remember what we said it was going to do something like this. Yeah. This guy. Okay. So he doesn't want to respond. something like this. This is what I said. So it will pull back to this premium, then collapse, right? But then if price gets to this premium, you cannot just start selling, guys. Don't be don't be every how would I say it? Don't be a proactive trader. Don't be someone that wants to force it. Just feel that the way you analyze the market in your head and the way you analyze the market in the chart, that the market should not do it like that. No, once you do your analysis, what you have to do is to keep calm, be patient for the market to tell you that okay, it's about to respect your analysis. So if this guy pulls back to this premium, I'm not just going to start shorting it. All right. I'll wait on the daily time frame to see if price will react from this level. So if price would literally want to respect this analysis and want to react from this level on the daily time frame, I will see a break of structure on that daily time frame, or I will see, I will see that price would. Now let me show you something. If price gets, let's go to the daily time frame, so I can show you what I mean. So on this daily time frame, if price wants to react, once it gets here, this is what will happen. More like this. So it will first of all give us something like this. Then if I see something like this, that it has, in fact, let me delete it again. Give you. So it goes here, comes back. If it wants to react from this level, if it wants to actually revise from this level, what will happen is that it will first of all do as if it wants to come down, right? And to finally pull back before the collapse. Or like this. This mouse respect yourself, okay? Mouse don't want to help me. Something like this. Yeah. So this is what will happen on the daily time frame. I'm just telling you as a clue. I'm just giving a clue. I'm not telling you this is what will happen initially. I'm just letting you know that this is what will likely happen. So this will now serve as a medium time, or should I say, a smaller, um, a premium within the premium. Let me put it that way, right? A supply area within the maximum supply area. So this is already a supply area on the weekly time frame. On the daily time frame, it will also have to give another supply area. So meaning that price has shown you that it has to respect the zone. So once you see any price action or anything like this on the daily time frame, once EURUSD gets here, then you know that it's about to collapse. And how many pips is that? Let's go back to the weekly time frame to confirm how many pips we are going to be having on the euro. Massive, a lot amount of people. I'm trying to run the section because we don't have enough of time to spend. So the first level target is about nine 1,000 pips. First level target on euro 1,000 pips. Second level target 1,200. Third level target 1,500 pips. So 1,500, 1,000 pips to 1,500 pips is what we are anticipating on Euro USD. However, within that 1,000 pips, we could see two, three additional, or even four additional entry points. If we add them together, it might give us up to 3,000 pips on just the Euro USD. And also have it at the back of your mind that we are already in Q4, and Q4 is already ending. We are about to step into December, where liquidity will be somehow drying out of the market. So trade with caution. All right, don't expose yourself to too much risk in the marketplace. So that's it for the Euro USD, GBP USD. The same thing we spoke about in the last section on the GBP USD. Still, that GBP USD pulled back to a significant area of premium and closed as a rejection. What followed that rejection was a bearish engulfing candle, which we said that bearish engulfing candle was telling us that euro was about to fall, for that GBP was about to fall. Right now, going to the weekly time frame, we could see that there was a break of structure here. I mean, I deleted it because my chart was looking to scatter. I don't like using scatter charts. If my stuff looks too messy, I have to delete some stuff. So this was a break of structure, and we told you, I said in last section, the last episode, that this break of structure would mean that um before GBPUSD sells off, he has to pull back to a significant area of premium, which we highlighted here. We can see that it's already, who's calling me? Stop calling me, please, in the section. So once it pulls back down up to this premium, it will fall, right? So this is over, let's check the amount of pips right there on euro. On GBP, why do I keep calling euro? What is it? Its first level target 1,400 pips. Second level target about 2,000 pips. Within this 1,500 to 2,000 pips, we are going to grab over 3,000, 4,000 pips. So within these two assets, in fact, we are already projecting 5,000, 6,000, 7,000 pips on just GBP USD and Euro USD. Let me say, for people who like counter trends, right? I also counter traded these assets, these buys. Is not in the direct overflow, order flow, right? But I took the trade. Why? Why? Because I saw a break of structure still at now. This, let me go back to the weekly time frame. Hold on. Now, this was also a medium term or a minor discount. So this minor discount was what held the price and made it to pull back to this premium. Now, since I knew that, I went to the also saw a bullish engulfing there, which told me that this guy was about to buy, right? So also after look at it here, I now saw a pullback to fill this fair value gap and dipped into this supply, sorry, this demand. So I bought GBPUSD, yeah. So I've already taken partial profit at the buy. I'm going to offload my whole profits somewhere around here. So that's just the whole analysis for GBPUSD and Euro USD. Next asset we have in line is gold. Let's just check what gold is doing. Now, let's go to the monthly time frame. On the monthly time frame of gold, let's look at this asset critically. This asset has been in, after this guy hit $2,000 per ounce in 2020 during the COVID period, right? This guy has been trading somehow in the range. Okay, now last 2022, right? This guy went from a double top collapse. I traded all this collapse throughout 2022. I was shorting gold throughout this 2020, all this move. So between November and this time, this guy formed a triple top. You also know that triple top is a bearish reversal pattern. I'm running out of time. Running out of time. Running out of time. So let me rush this section. I know no time. So there was a triple top, right? And after the triple top, what followed was a bearish engulfing. A bearish engulfing was what followed this triple top, which told us that price was about to collapse. All right, now going down to the weekly time frame to see if that collapse was going to occur, we saw that it was a break of structure here. There was a break of structure somewhere here. First of break of structure, it was here. So I shorted this as I remember that the last section we had, I was on the sell on gold, right? Sold gold from here. This premium here, sold here. Right? I also sold here again. All this bearish, this massive bearish candle was, and I took my profits here. And look at what followed. Bah, big bullish candle, big bullish candle, big bullish candle. Now, what actually caused all this bullish rally? We have what we call financial crisis, or let me not say economic crisis. So a few weeks ago, we knew that there was a clash between Israel and Hamas. And when there is an economic crisis like this, right, what tends to happen is that investor will literally take their money from every other assets and put it in a safe haven. And what happens is that gold serves as a safe haven. So investors will be taking out their money from other financial instruments to put on gold, which is a safe haven. This was what caused the bullish rally, massive bullish rally on gold. On a normal, gold would have still collapsed, but because of that economic crisis, we saw what the impact it really had on gold. Gold started buying massively. And what happened was that on the monthly time frame, it closed as a bullish engulfing, still at this critical area. So this guy, I would say gold is more of an indecision. Is an indecision we are seeing massive sell opportunities, and also this bullish engulfing candle is making me slow down. However, what I did was I went to the daily time frame and I saw that it broke structure and it has pulled back into this supply or this premium. So currently I'm on a short position. I shorted gold, yes, yesterday. I shorted gold yesterday, but then because of that indecision, I'm already thinking of taking out my position or reducing the risk and all of that because of that bullish. I'm just looking at it closely now that bullish engulfing is not giving me that confidence. However, on the macro reports that our research analyst sent last week, it was showing that gold was giving a short-term bullish rally and long-term sell-off. So the next week's data would give us more insight as to what gold is going to do. So just look closely because of this bullish candle. I'm really skeptical as to what gold is going to do because of this bullish candle and how it closed. But let's see what subsequent week will do. But then I don't think I see people already projecting that gold is going to buy like this, break this high, and be going back, be rising massively. I don't really think that would occur. The reason why I said that is because this is still until it closes above this high, closes above this, this guy cannot, you cannot just predict that it's going to keep buying. So be careful if you're already projecting that this guy is going to break here. You cannot say that you're not the market maker. So allow the market to do its thing to give you as to what it wants to do. So that's it for gold. I think how many minutes do I have left here? Are you guys seeing at your end how many minutes we have? All right, that's it for 5 minutes. All right, so we have 5 minutes left. Let's brush up oil, oil prices. So oil prices, remember, it was at discount. Yeah, it was at discount here, and I told you that because this guy closed as a bullish engulfing on the monthly time frame, and on the weekly time frame, the guy broke structure. So this is the weekly time frame. We can see that this place, let me highlight it. This was a break of structure. All right. This was a break of structure. So this break of structure gave us that impression that it was going to buy, but then I had to wait for a pullback to a significant area of discounts. So this was the discount I highlighted here, and you can see that when price dip, it respected this discount. Let's go to weekly time frame so it will be more clearer for everybody to see. So on the weekly time frame, we saw that when this guy dipped into this discounts, you can see it started buying. So I bought here and I took 50% of my position off. Immediately I saw this bearish engulfing here. I took all my position. Right, I took all my position. So good thing was I made some money on oil, and the other one was on break even, was stopped up on break even. So you can see the things reverse massively. So currently we are still watching on the monthly time frame to see. This thing is no longer valid, so let me take it off. It's no longer valid. So on the monthly time frame, what oil is doing currently is that you can see that I have highlighted the main threshold of this other block, which is the discount, serves at the discount here. So oil is currently trading at this discount. So what we do as responsible traders is to go on the weekly time frame and wait to see the reaction of what oil will do. So if oil still intends to go up, it will break structure again on the daily time frame and pull back again to the discounts. What I showed you when we were doing analysis on GBPUSD. So something like that is what we are expecting to occur here on oil. So if that happens, of course, my first level target is still $100 per barrel. My overall target on crude oil is $120 per barrel. So let's watch the price action and see what it does. And you can see it's still inverse head and shoulder. So there's still 80% 80% assurance that oil will still be going up. except it closes below. If it closes below this area, just here, if it closes below this zone, let me highlight it. It closes below this blue zone. When it closes below here, then we can see that oil is going to collapse. But as long as it stays and sustains above this discount, this blue level, then oil is still going to rally. So let's wait and see what happens on oil. So that's it for all the analysis I have for you guys. And for the macro reports, it's also will be sent every week to my clients on the market report. I wouldn't be sharing those that template again to you guys. Why I did that just for free, I just needed to give you guys, share some tips to you guys. So don't expect to get that macro data from me again if you are not paying for it. Okay, do we have any question? Do we have any question? Any question? Steve, can you hear me?
So we should all look for a sell on EURUSDT and
once it pulls back fully, once it pulls back fully to that premium, then you can look for it. Any other question? So let me share my screen finally before this section ends. Okay. Can you guys see my screen? So now, can you see the screen? We have less than how many minutes left? Can you see my screen? Can you see the macro data here?
yeah, we can see it.
Okay, great. So you can see this was the macro data we had, and it was GBPUSD for the week was telling us it was a strong buy, and of course this was what really made me scale down to my charts analysis to buy the GBPUSD. Same thing on EURUSD. So this is the macro data we had for the week. Every week we will be getting this data, because this macro data gives us this confidence that technical analysis is lining up pretty well with that of the institutions, right? So don't expect to get, for those of you who got it on the Telegram channel, and those of you sent me a DM and got it, please don't expect this every week if you don't, if you're not a client of the market outlook reports. For market outlook report, it costs $1,000 per year. It's a yearly subscription. Okay. Any question? The section is ending now. Any question? If no question, say thank you and we end it. If no question, type profit and we end the section.